What's going on, guys? Welcome to the daily technicals video for August 28th. We are going to get started with the dollar index, but first off I want to briefly go over the two trades that we called, or the two signals that I called so far for the week. Let me just drag this over. Alright, so we had this buy limit on. Alright, let me know if you guys can see and also hear me. You should be looking at like two trade signals here. So Monday I posted this buy limit here, and I'm just gonna go over like basically what it means, like for anybody that may be new or like may not understand. So everybody just has like, so we're all on the same page with like, you know, how to take the signals and like what they mean and all that stuff. So Monday I posted the Euro USD buy limit, and basically all this is if you go on MetaTrader you can place a pending order, and this was a buy limit set for 1.16 big figure, and you can see at the time we were trading at about like 16.19, so we were 20 pips away. And what a buy limit is, if you don't know, it basically just whenever the market trades to that level, it'll trigger our position and it'll put us in the market. So I wanted to buy the market at 1.16 big figure. I had my stop loss at 1.1530, which is 70 pips away, and I had my take profit set at 1.1750, so 1750, which is 150 pips away. So that's a 1 to 2 risk to reward ratio. And anytime that I use a buy limit or a limit order, and the reason I placed this was because I was going to bed. This was Sunday night, so like early Monday morning. And I was going to bed, so I placed the buy limit order and set my stop loss, set my take profit. And when I woke up, obviously the order was hit, and I'll go ahead and show you the results of that now, and then we'll go over the GBP USD. But basically this is the results of this trade here that we took on Monday. So this is Sunday's trading right here, and this is Monday. So this vertical line and this vertical line measures out Monday's trading, and you can see here the market traded down, and 1.1600, the buy limit, was triggered, and as you could see, we rode the market all the way up here, and I scaled off the majority of my position up here at 1.1685. You could see that I did take two additional positions, so I entered the market here at around like 1612 or something. So I put on about 25% of my position here. So the way, like, just so you guys can understand, like in simple terms, if you're looking to place one standard lot, and if you're working with smaller position sizes like, you know, 0.10 or 0.05, this really isn't going to apply to you. But if you're looking to like place one standard lot, what you can do is scale in your position. So I put 0.25, so a quarter, like 25% of my position on here, and the additional 75% was here at 1.16 big figure, which is what you see the buy limit for. So I entered a little portion here early just in case the market was going to take off, and we didn't get that 16 big figure, which we did end up getting while I was asleep, so that was nice, and we took off. So you can see that I scaled off a portion of my profit here. The reason I did that is because we were trading above this old high, and anytime we get above old highs or anything like that, you want to take some profit off. So I scaled some of the position off here, and the two smaller positions that I added on right here in this little small consolidation, I scaled those out right here. Once we swept above this intraday high and got back into this intraday ICT bearish order block. So it made the most sense for me just to capitalize as much risk as possible and keep the majority of my position, which was down here, on for the higher targets, which was ultimately 1750. But I always like to scale, you know, a significant portion of my trade off and look to, like, you know, re-enter or something the next day. Especially when we catch like 100 pips in a day like this. So this was 100 pip. Well, I don't want to say a full 100 pips because, well, I'm actually still in the trade and I'm still up 100 pips. But for this particular screenshot that I'm showing here, I entered the trade at 1.16 big figure and closed the trade at 1685. So that was 85 pips, and for one day, I mean, like, a lot of people don't catch 85 pips in a month, like, consistently, if we're being honest. So, like, if you think in you know, like, the context of it, 85 pips in one day is ridiculous. So that's why I scaled the majority of my position off here. Like, I don't want to be greedy. Anytime I'm greedy in the markets, and anytime anyone's greedy, it'll take a lot of money from you. So don't do that. All right, so that was the Euro USD buy that we took on Monday. So that was nice. And then last night, I at 10:17 p.m., so that's Pacific Standard Time. If you guys are in New York, that's 1 a.m. That's basically the start of London session, or like what I consider the start of London session. And I called a buy on GBP USD, and the levels were between 1.2850 to 1.2865. So all that means is if price trades down to 128.65 or lower, at absolute lowest 28.50, you can buy the market. So if it's below 28.50, you should have not bought the market or anything like that. Okay, only if it's 28.50 to only if it's 28.50. Give me a second, guys. Alright, sorry about that, guys. I'm back. So with the position that we called on GBP USD, basically there was, you know, a range that you could enter the market between, and that was between 28.65 and 28.50. So last night we traded down to the low came in at like 28. We'll look at it in just a second. It was like right below 28.60. So I actually took my buy position at 28.67, which was a few pips above 28.65, 2 pips above to be specific. And typically, you know, I don't mind entering a few pips early or anything like that if it's, you know, just to account for the spread. So let's go ahead and talk about this real quick and the results of that. So early on, from the start of Tuesday's open, which this line right here marks Tuesday's open, and right here is Tuesday's close. So we opened up and we basically traded lower into a level of potential support, which is these old highs back here. And if you draw your fibs on this, it's probably like a close to a 62% retracement level or something. It looks like we'll look at that in just a second. But basically, you know, that was a buy entry there, and we had our take profits at 29 big figure and 29.20 and 29.50. So as you guys can see, this was on 1.2920, hit the target there, which was 55 pips from where I entered, and I scaled out the majority of my position there. Now, once we started like pushing down aggressively with this candle here, I just went ahead and closed the remainder of my position. But again, I scale like 90% of my position off. If I have any trade that's above 30 pips, I never ever keep more than 90% of my trade on. So I'm always scaling. That probably didn't make much sense, but I'm never keeping any more than okay, I don't know what I'm saying now. Basically, you need to scale more than 90% of your trade off anytime the market goes 30 pips in your favor. So that's what I did here. 55 pips, 90% of the trades removed. As we start pushing down, you close the remainder of the trade. Okay, never allow yourself to basically give all the profit that you made back. So whenever I have targets here, there's target 1 and target 2. Make sure you're scaling partial profits off at those levels. And what you can do is you could set your target, your take profit on your MetaTrader at like 29.50. But if you're looking at the market and it's at 29.20 and you don't scale something off there, you're making a mistake. Look at how they behave once they hit those levels. They come right up, come just shy of 29.40 or 29.30, whatever this level is, and start pushing lower. Okay, but if you scale the majority of your position off here, you have nothing to worry about. You've already paid yourself 55 pips for the day. So between Monday and Tuesday, that's 85 pips and 55 pips. So over 100 pips in 2 days. And I don't know if you guys remember when we were in the summer months, well, which we still kind of are like late in the summer months, but we were getting a lot of, nothing really to take action on in the markets. But now, since the market's trending again, and we haven't necessarily broke this low to give us any significant volatility lower, but overall we are seeing very clear and clean price action. So it makes the setups really easy to take. So that's how we were able to do that. So we have to, well, with all that being said, now let's jump into like the actual charts and what I see going forward for tomorrow. And since we've had such a nice sell-off in dollar index, which this chart here that we're looking at is dollar index, the daily time frame. Since we've had such a significant sell-off so far early on in the week, and we're trading within this bullish ICT order block here, notice how today's daily candle came and wicked below the 50% level of the order block and then traded up higher. So since that happened, we could see a little bit of a further retracement higher, whether they come back up and tap this low at 94.95 or all the way back up into this ICT bearish order block at 95.20. So basically, I'm not going to try to push it. We've already had 2 great days in terms of trades for Monday and Tuesday. I don't want to push it too much. Obviously, if there's a clear setup, I will take it and I'll call it for you guys in the group. But I think we could get a little bit of bullishness on dollar index just because we've come down into this and we've had such a nice sell-off so far. I think they may want to trap a few more people in here. So they could push it up, take us back into, again, 94.95 up into 95.20. And, between there, I'd like to see some resistance come in. I for sure do not want to see them get back above 95.40. If we get back above 95.40, I think, this little bearish run here could be put off for a bit and we could push a little higher. So if for us to continue lower, ultimately shooting for 93.20, I need to see them stay below 95.40. Okay, but ideally I want to see some resistance come in at 94.95 to 95. What is that level? I'm sorry. 94.95 to 95.20. So have those levels on your charts as resistance. So what I'm going to do now is do that. So I'm going to remove that, and I'm going to keep this 50% level on because we traded into that support level so far, and we've reacted bullishly. So like with that being said, I have to mark out any potential near-term resistance levels that the market could trade up into, which would be the ICT bearish order block here, or old support. Short-term support was this low, got a little push up, and then we traded lower. So old support now becomes what? Resistance. And you could see that today we did push up there a bit. So it may not be necessary for them to trade all the way back up and do it again. But I do anticipate a potential short-term, maybe like 1 day of a bullish day for dollar index, since they are within this ICT bullish order block here. But overall, I mean, I'm still bearish, and I want all of these lows in here to be taken out. So there's basically liquidity below that low, this low, and this low, and these lows. So I want to see the market continue pushing lower to clear all this up. And for that to happen, like I said, I need to see them stay below 95.40. Okay, so let me go ahead and move over to euro dollar now. So just to simplify that, in terms of what I see potentially unfolding for tomorrow, Wednesday, we could see a short-term push up. So it could form the high, at 95, at 94.95 or 95.20, around those areas, in between that range at least. And after that happens, again, we'd want to see some resistance and see the market trade lower. So, there could be a setup that comes, that forms during, say London or even New York session. So I'll be looking at the charts and I'll send anything through that I take. But so far, I don't see anything that I want to specifically act on going into London tonight. So if that changes, again, I'll let you guys know. Okay, so let's look at euro dollar now. So from the weekly technicals video, if you guys haven't watched that yet, make sure to go watch that video, because euro USD analysis has been spot on, exactly what we expect to occur. Last week we mentioned how they had this ICT bullish order block, and Monday or Tuesday we'd likely form the low of the week and trade into that. As you could see, Monday opens up, trades lower into the ICT bullish order block and pushes higher. Then we form this candle here on Thursday, close Friday above it. Weekly technicals, we talk about how potentially Monday, Tuesday, we could expect the low of the week to form either here or absolute lowest here. And as you can see, Monday we trade lower right into that ICT bullish order block and we push up higher. And obviously the week's target is still set at 1750. We do want to see all this liquidity resting above here. We've got so much liquidity built up between all these highs that we want to see the market push back above that. And yeah, that target was about 150 pips from when we talked about it in the weekly technicals video. So like I mentioned in my previous videos, if you watch the weekly technicals and you want to, you don't have time to look at the charts or anything, set buy limit orders or sell limit orders at the levels I talk about, and they don't have to be on a live account. You could do it on a demo account to practice. But do that, and you would have gotten triggered for this, and you would have also gotten triggered for this. So this was a longer term swing trade that we talked about up to 1750. And as you could see, that's about almost 350 pips that basically, came together over 2 weeks now. So that was all talked about before the fact in the weekly technicals video. So again, if you don't watch those, make sure to start paying attention to those, because I do give away a ton of information about where the markets are going to be heading and what to look for. So definitely watch those. So now going forward into Wednesday, what I want to see for this pair is, obviously, again, I do want to see 1750 hit for the week, but that doesn't have to happen tomorrow, right? We could see, again, a short-term bearish day. The market could push down, down to 16 big figure again. Even it could just form a long wick and do that. I don't necessarily want to see that from, since we're 93 pips above that. Now, realistically, they could come down, and they even could do that. But this high here at like 1630, I'm watching that because that is a near-term support level. So it was old resistance. You could see we sold off from there, and we could get a little bit of support coming in if we get some bearishness down to that level. So that's something I got my eye on right now. And that level comes in at 1630 again, so we're going to go ahead and put that on our charts. And support is blue, so we're going to change that color. Okay, so have that level on your chart. Again, we don't necessarily have to come all the way back down here, but with dollar index being in that ICT bullish order block and how the daily candle has formed so far, it's just it's not giving me a bunch of confidence to think that tomorrow would be a continued bearish day, but it very well could potentially be, because a lot of times what they like to do is they'll put in place what they call a false high. So As you can see, if we look at euro dollar here, this would be like referred to as, I don't know, you guys put in the chat like whatever you would call this type of candlestick here. Let's see what you would call it. I know some people call them dojis. I really don't know too many like retail terms, but yeah, put those in the chat if you know what type of candlestick this is. Anyways, they typically, they like to put like a fake high or a false high or a false low in the market. And a lot of retail traders are looking at this and they're thinking, oh, 1750 is strong resistance. It formed a wick here. It's gonna continue lower. And like I said, it could get a short-term bearish scenario, maybe down to 1630, maybe even down to 16 big figure. But like, if we're being practical here, 1750 has a ton of liquidity above it, and there's no reason for them not to take that out first. But it would make sense for them to form a false high or a fake high right here. Bring it a little bit lower, so they don't even have to come much lower, because a lot of retail traders trade off of lower time frames, so they can engineer whatever they want. But basically, if they trap a bunch of retail traders in here thinking that this is a high that formed and it's going to start selling off, and they've caught the high and they get them all excited, then that gives them just more reason to want to shoot for the liquidity above 1750. So something I really suggest you guys do is focus on the higher time frame liquidity. Like, where would price go based on, like, where is the money in the market? And this is where there's a lot of money in the market. You know that because look at what they've done. They've formed a high here, they've consolidated for a bit, and then they've dropped it lower into what? A logical support level. This blue line is the weekly ICT bullish order block we were talking about at 1.13 big figure. Okay? Drops down into that. What does it do? Clear out all the liquidity below here. What was this? Equal lows. You guys remember these equal lows at 1.15 big figure that we were talking about? For those of you that have been with me for a while now, 1.15 big figure. Guys, we've been basically annihilating euro throughout this whole thing. The consolidation, the drop down, the push up, all of it. Because we know what they're going to do. We know where the money's at. The money was below the equal lows. Where do they go? Below the equal lows. Now where's the money? Well, they've gotten above here, so where's the next level that they would want to go to? Here. Look at the highs. So what do you think? All these people that sold the market, they're making money all the way while the market's pushing down. Guess what they're doing right now while the market's pushing up higher? They're closing their positions. They're getting scared. They're thinking that the market's going to push lower. But they've got them stressed out. The people that sold the market here, they are stressed out. So if they push the market above that and stop them out, guess what? These guys that sold it up here, they're not too happy. So then what they're going to do is they're going to try to sell the market again above that, or buy the market on a breakout. Like it's a never-ending cycle of taking stupid people's money. So how you become better than them is just do what the people who basically control the market do. And it's as simple as understanding where the money is. How you understand where the money is through where are the double tops and the double bottoms. So where are the equal highs, where are the equal lows? We've got 1, 2, 3, 4 equal highs here. We've got 2 equal lows here. The market easily came for that. Now look at the strength the market's had so far from this level all the way down here. We've had an extreme reaction to get where? Well, they're trying to go somewhere, so it's either going to be above here or it's going to be back above here. One of these two levels where there's a lot of liquidity built up is where they're going to be taking it. Yeah, shooting star candle. So there's so many different type of names for candlesticks, right? And a lot of retail traders know that. So you can't trust that with all the liquidity built up above here that they would logically form a high here. So if they maintain support, which let's think about daily support now. Daily support is this ICT bullish order block. If they get back below 1565, which is the 50% level, well, then we know it's game over. Then they're going to take it lower. Then they may want to come back down into this order block. But while they're above that, they should find support here. So like I said, shooting star candle or doji or whatever other names you could call this, they can trap these retail traders, drop it into support, they can make a little money on the drop down. But ultimately what they're going to look to do is trap them, because they're selling it, they've got their stop right here, right above this high. So they can even push it down a little lower, let them catch 20, even 10 pips. And then just shoot it above it, clear out all the liquidity above the market, and the market makes way more money. The game is the market is trying to take your money. So just do what the market's going to do. And it sounds simple, but when you really understand it, it's as simple as that. You're positioning yourself in the best position or best opportunity for you to take advantage of where you are pretty confident that the market is likely going to go. And the way that you're pretty confident is by, spending the time in the charts and understanding what it is you're specifically looking for, and, how it all works for you specifically. But as you can see, we've had a ton of strength to push up above the 1750 level. So we haven't got there yet, but anticipate them getting there. I would like to see it by the end of the week. And overall for bullishness, though, we need to hold this ICT bullish order block. So with all the strength we've had in here, though, I don't see them wanting to take it much lower before taking out all the liquidity above 1750. So for tomorrow, again, we could see a slightly bearish day, or we could just trade lower into maybe a lower time frame support level, and then ultimately start pushing up for 1750. But over the next few days, definitely be looking for 1750 as a target. All right, GBP USD, as you can see, a little bit of a consolidation in here. But again, that didn't stop us last night from finding a profitable trade setup, and we still caught 50 or so pips on that trade. So just goes to show you, when you look at the daily chart here and you see like, oh, this candle, looks like a bearish candle, but we bought the market and we made money on the whole way up. So you don't have to always be right on the daily direction. Do I know if the daily candle is going to close bullish or bearish? Well, I have an idea, and I would have thought that this candle would have closed bullish, but it doesn't matter. I scale out the majority of my position once I've already locked in 30 or more pips. So what did I do here? Collapsed my profit, locked it in, and then so what? If it trades lower, who cares? And it did. But who cares? Because it doesn't matter, right? You can make money there's so much opportunity in the market to make money. You just have to find what fits you best and what you can understand. Whatever those things are, that's all you should focus on, and you could easily make money in the market. And this is a perfect example of that. If you would have asked me yesterday, I would have said, oh yeah, GBP USD should have a bullish day and we should get back above 2940. And that's why 2950 was my target, because it's right above 2940. It's 10 pips above it. So, I would have thought it would have been a bullish day, and I still bought the market based on that analysis. But as you can see, the market formed a wick. So this wick on a lower time frame is what? Bullish candles. And that's what I was able to capitalize on. So you can see, bullish candles. We bought the market down here around 28.65, 28.67, which again, like I said, I bet this is around the 62% retracement level. Let's just do it for fun. Oh no, 50%. I was wrong. Okay, so that was just that was me seeing if I was right or wrong there. But we traded into this old high back here, which is what? Support. Why? Because resistance, broke through it, retested, support, trades back into it, support. So we bought it, right? Stop loss was down here. Targets were up here. Collapsed the majority of our position. Now, we still wouldn't have got stopped out yet, but why would we have wanted to sit through all this stress as the market's pushing down? That's stressful. And there's no reason to have to do that. So, and I don't know if any of you guys deal with this, but I definitely used to struggle with this. I would try to hold on to the trades for as long as possible because I thought, it was just going to go to the moon. And you can't have that mentality. If you can profitably catch like 30 to 50 pips a day or even a week, 30 to 50 pips a week on 10 standard lots, guys, we're talking 30 to 50 grand. Right? Yeah, 30 to 50 grand in a week on 10 standard lots. You just have to build up to that. So you obviously have to start somewhere, and you got to start with a smaller account, but don't think that, don't take catching 30 or 50 or even 80 pips in a day for granted, because that is huge. I can almost guarantee there's not a lot of other signal groups out there that are calling 80, 50, even 100 pip trade setups. Not consistently. The problem with most signal groups is they're literally posting every single trade idea possible. So they have a win or a strike rate of like less than 50%. Notice when we take trades, it's spot on. We have a high strike rate. We minimize risk. We maximize the reward. So with GBP USD for tomorrow, again, looking at the daily, we're just kind of stuck in this consolidation. I want to see them get back above 29.40 here. So this is ideal. We want to see it continue bullish and continue pushing higher. And 29.40 would be the first target for that. So that's what I want to see tomorrow. Now, in terms of how low could they potentially come down to in terms of support, what I'm thinking is they're more than likely going to run this low here. They're more than likely going to run the low with as close as they are. Now, they don't have to. They could use this as support and continue pushing higher from here. That's a very probable scenario as well. But we do have this ICT bullish order block. So it's a few down candles on a 4-hour time frame. This is 1, 2, 3, 4 candles. On an hourly chart, on a 4-hour chart, it would be a 4-hour ICT bullish order block. So the absolute lowest I would want to see this go would be the 50% level of those 4 candles. And that comes in at 28.46. So put that level on your charts, because if we get below 28.46, then I think GBP USD is probably just going to consolidate for a bit. And there's nothing wrong with that, because we could still actively trade euro dollar and obviously keep catching pips on that. So we don't need GBP USD to make money, and we don't need euro USD to make money. There's plenty of pairs to trade and all that. So while a pair is consolidating, real simple, just move to a pair that's not consolidating. And as you guys just seen before that, before this pair, looking at euro USD, we weren't consolidating. We had plenty of big, nice bullish days. So yeah, that's what I'm expecting for GBP USD. That's all I really got for you guys today. I'm not going to go over all the pairs or anything, because we've been on here for a while now, and I got to go ahead and wrap it up. But let me check out the chat real quick and see if there's any questions that I need to answer before I hop off here.